In the first part of this series, we explored the foundations of SEC filings. We identified where to locate these filings. We discussed their significance. We also saw that some of the most valuable stock market information is often overlooked, despite being publicly available. But understanding where information comes from is only the first step. The real challenge lies in effectively using that information. Every year, millions of investors have access to the exact same filings, the same annual reports, the same quarterly reports, the same corporate disclosures. However, some investors consistently identify opportunities that others overlook. What sets them apart? Successful investing involves more than collecting information. It requires the ability to interpret and analyze that information. Professional investors approach filings differently than casual readers. They examine them with the diligence of detectives. They investigate details thoroughly. They search for insights as business owners would. In this video, we will examine the process in greater depth. We will explore how professional investors analyze foreign companies. We will discuss how they compare filings across different periods. We will review how they distinguish critical information from less relevant details. We will also examine how they develop an investment edge without relying on predictions. The greatest opportunities in investing rarely come from undisclosed information. They result from a deeper understanding of public information than most investors possess. Let's begin. The foreign company advantage. Many investors limit their investments to domestic companies. This tendency is known as home country bias. Investors often prefer businesses they recognize. They are familiar with the brands. They understand the culture. These companies are frequently covered in the news. As a result, large segments of the global economy receive less attention from retail investors. Yet today's economy is global. Many of the world's fastest-growing businesses operate outside the United States. Some companies dominate entire industries within their regions, with competitive advantages that are not widely understood by international investors. Fortunately, many foreign companies are accessible on American stock exchanges through American Depository Receipts, or ADRs. These companies generally file annual reports using Form 20-F. The 20-F may initially seem unfamiliar. However, many of the same principles still apply. Investors can still analyze revenue growth, profitability, debt levels, cash flow, management quality, competitive advantages, and business risks. But there is another potential benefit. Lower visibility often results in less competition. When hundreds of analysts follow a large domestic company, information is quickly reflected in the stock price. When fewer analysts cover a foreign company, market inefficiencies may persist longer. This does not guarantee opportunity. However, it can create opportunities for patient investors to identify value before the broader market does. Many successful investors have historically sought opportunities globally. They understand that opportunity is not limited by borders. Capital flows internationally. Businesses compete internationally. Investors should think internationally as well. The global market extends well beyond the stocks featured on nightly financial news programs. Sometimes the next significant investment opportunity may be found in a filing from thousands of miles away. How professional investors actually use filings. Many people imagine that professional investors spend their days reading every page of every filing. The reality is far different. Professional investors are not simply collecting information. They are searching for insight. Imagine two investors reading the same annual report. The first investor reads it and moves on. The second investor asks questions. Why did gross margins decline? Why did debt increase? Why did management change its guidance? Why did a previously highlighted metric disappear? Why is executive compensation increasing while earnings are falling? This second investor is approaching the filing like a detective. Every filing tells a story. The challenge is discovering whether the story makes sense. Professionals often begin with the business overview. How does the company make money? What products or services generate revenue? Who are the customers? What are the major risks? Next comes management's discussion and analysis. This section is often one of the most revealing parts of the filing. Management explains recent performance. They discuss challenges. They outline future priorities. The language itself can provide clues. Confident management teams often communicate differently from management teams facing difficulties. Professionals then move to the financial statements, but they rarely stop at the headline numbers. They examine trends. Is revenue growth accelerating or slowing? Are margins improving? Is debt rising faster than earnings? Is cash flow supporting reported profits? They compare multiple years. Patterns often matter more than individual quarters. Finally, professionals compare filings over time. This step is frequently overlooked by retail investors. A filing from this year becomes much more valuable when viewed alongside filings from previous years. Changes become visible. New risks emerge. Old promises can be evaluated. Management's credibility can be tested. In many cases, the greatest insights come not from what a company says today, but from comparing what it says today to what it said 5 years ago. The investor's edge. Every investor aspires to gain a competitive edge. Some seek out hidden indicators. Others look for reliable market predictions. Many spend years pursuing formulas that claim to deliver easy profits. However, the most enduring advantage may be much simpler. It often comes from undertaking work that others avoid. Today's financial environment is saturated with noise. Financial news channels broadcast around the clock. Social media produces thousands of opinions each day. Market commentators continually forecast crashes, rallies, recessions, and booms. Much of this information is intended to capture attention. Very little of it helps investors understand business. An investor's advantage comes from focusing on substance rather than noise. Reality is found in the filings. Reality is found in the numbers. Reality is found in cash flow. Reality is found in corporate disclosures. Reality is found in management actions. When investors learn to analyze these documents independently, a significant transformation occurs. They become less reliant on experts, less reliant on predictions, less reliant on prevailing market narratives. They begin to think like owners rather than speculators. This approach is characteristic of many of the world's most successful long-term investors. They focus on businesses, not headlines. They focus on facts, not forecasts. They focus on value, not popularity. Over extended periods, this approach has consistently proven successful. The stock market will always fluctuate. Fear will always exist. Greed will always exist. Speculation will always exist. But businesses continue operating. Products continue to sell. Customers continue buying. Cash continues flowing. Investors who focus on these fundamentals gain an advantage that endures despite changing market trends. The greatest edge in investing is not access to confidential information. The greatest edge is the ability to think independently. And that journey often begins with a single filing. As discussed in this video, the difference between average and exceptional investors is rarely access to information. In today's world, information is available to everyone. Annual reports are public. Quarterly reports are public. Insider transactions are public. Corporate disclosures are public. The challenge is not accessing information. The challenge lies in interpreting that information. Professional investors take a different approach to the market. They do not just ask, "What stock should I buy?" They ask, "What business am I buying?" They look beyond stock prices. They focus on the quality of the business, financial strength, management decisions, competitive advantages, and long-term value creation. The filings discussed today offer insight into this reality. They enable investors to move beyond opinions and focus on facts. They encourage analysis over speculation. They promote understanding beyond headlines. This approach does not guarantee success. No investment strategy can eliminate risk. However, it can significantly improve the quality of your decisions. Over time, better decisions often lead to better outcomes. The market will continue to fluctuate. Economic cycles will come and go. Fear and greed will continue to influence investors. Yet the principles of sound research remain consistent. Study the business, verify the facts, think independently, and never stop learning. Because investing is not a competition against the market. It is a lifelong process of improving your ability to make rational decisions. And that process begins by understanding reality better than the crowd. Thank you for joining me for part 2 of this series. But we're not finished yet. In the next video, we'll uncover some of the most overlooked disclosures hidden within corporate filings. We'll explore executive compensation, proxy statements, share dilution, stock-based compensation, corporate governance, and the warning signs that can reveal problems long before they appear in the stock price. Some of the most important clues investors need are often buried in sections that very few people ever read. And those hidden details will be the focus of Part 3. If you found value in today's video, subscribe to the Illiterate Investor and join our growing community of independent thinkers and lifelong learners. Because the goal is not simply to become a better investor. The goal is to become a better owner of capital. And I'll see you in Part 3.